all America is talking about today. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your daily update for the major markets. You know, I would be remiss if I didn't make a comment on last night's debate. If you didn't watch the debate, I think it's universally accepted that Governor Romney brought in his A game while President Obama did not seem to show up for the challenge. I mention this only because we made a comment earlier in the week that politics and markets make strange bedfellows. Based on what the world saw last night, the election just got tighter. Today we are seeing the markets vote on the debate, and we are seeing the strong movements in equities as well as in precious metals. It is too early to say if this trend will continue for the rest of the day. However, we'll have to see. But be sure to vote in today's poll on our blog. I think it's very important that we get a sense of, not just for ourselves, but also for you too, about how people feel about the poll. We've got 3 questions there for you. So anyway, let's get back to reality and with the major markets and see what our trade triangles are saying about those markets. So let's go to our portfolio page. And here we are. The markets are actually up today, about 0.5%, maybe a little less, a little more. But looking at this is the S&P 500 index. You can see our trade triangles are clearly in the positive mode. You've got this is a 50-day moving average. Obviously, the prices are above that, very positive. And we're just below the PSAR, which comes in today at 1,464.44. So we're just a little bit away from that level. We got as high today as 1,463.14, so about a 1 or 2 points away from it, but that's the parabolic, and just to give you an illustration about what that is right here, and that is, this is the dotted line. Hopefully you can see this on your screen at home right here. If we hit this line, that'll really put this market into high gear. And I would certainly think if we can close above this close here, I think we'll be in good shape. So we need to close over the 1460 level. I think it's 1465 maybe, to get this market really kind of up and running in a major league. But nonetheless, we still have a very positive score of plus 100, and that's showing a strong trend, a strong upward trend. So let's clear the screen, go to our next market. Now, a little bit different on the Dow, which I'll share with you right now, is the Dow has actually put in a performance, hit the PSAR, and it's looking very, very good. If we can get this market to close over, gosh, the 13,600 level, it's only 26 points away, I think that would be a very positive sign for this market. The highest close you've had since then is 13,593. So we're not that far, 20 points away from a new high close in the Dow, and that looks pretty promising to me right now. Again, we thought this was sort of an energy building base to push this market higher. And on the S&P 500, we're looking for that to go to 1,550. So next market is the NASDAQ. The NASDAQ isn't quite performing the same way. We talked about this earlier. It's still a plus 100. But it's sort of moving sideways. It just doesn't have the oomph. And partly that's because of Apple. And we'll be looking at Apple a little later on in this broadcast. So let's go on to our other markets that we look at. And the next market is the crude oil. Now, crude oil, we talked about this yesterday. We talked about the Fibonacci retracement. Look at where this market, boom, huge move up today. Huge liquidation yesterday. Everybody got stopped out of this market if they were long. And the market's coming right back up. Now look at our long-term indicators. Still positive. You're coming from an oversold condition. We just need a few more elements to come into this to really give us that sort of sense that the market has turned around. And again, the wild card, of course, is the Middle East and what can happen there. And that's not predictable at this point in time. But given that, I'd rather be out of the market or long this market, based on our long-term monthly trade triangles, which are still positive. Short-term and intermediate term, which means the daily and the weekly, are still negative. So best leave this market alone until we see some sort of real turnaround on the upside. So and that could occur given the volatile situation in the Middle East any day now. So moving to our next market. This is the euro-dollar. Now remember, we talked about this. We've been talking about this pretty much all week. And the pattern we talked about was the fact that the market went up like this, and then we sort of had this, what they call a flag formation, and the fact that we broke out of it and decisively today. We moved over the PSAR, which is the parabolic stop and reverse, and we're currently trading over the 130 level, 130.24. This is a real-time prices, of course, and this is going to be an excellent close. Now, this is all attributed to Mario Draghi's comments today and pushing the market higher. So I think we have to give this market some room. We're still looking for the 135 to 138 level, and I think that's what we're going to hold to until we see some sort of changes in the pattern. But a lot of people just aren't buying into this concept that the euro is going to be stronger. Certainly another 5 big handles on the upside. I think a lot of people aren't buying into it, and I think that's maybe the reason why it's going to go higher, is the fact that there's not a lot of company on this trade. So let's clear that screen and go to our next market. Next market is going to be, if I'm correct, it's going to be gold. Gold is trading at $1,792.49. If we close here at over this 1790 level, that'll be a new high close for the year in gold. And that's what I want to emphasize, for the year. And we can scope this out year to date, and you can see the last highs were back here at 1,788.70 on a close-only basis. And certainly this would be a new high close. So again, we've talked about the huge energy field in this market, which is right here. And you can see we've sort of continued to move higher and higher. And this, believe me, this is a very powerful base to move from. I mean, this took months and months and months. You're talking really from March of this year, so this is March, to really, I would say, sometime in mid-September. So we'll just say Sep. So you've got a bunch of months here, and I think that's is going to be enough to push this market higher. About 6 or 7 months here of base building, and now we're seeing the rewards. We've been bullish on this market. All of our trade triangles, as you can see, bullish, 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 plus 100. It's a bull market. And that's what we're looking at. Looking for this market to trade over the $2,000 mark, and the potential for it to go even higher than that is quite strong, maybe to 2,200, 2,300 on the upside. And when you think gold was just languishing there for a while, it just puts people to sleep, and then all of a sudden, whoosh, it's up. And we haven't seen the plethora of TV ads espousing gold, which they did right here. You see, every time you turned on any kind of financial show, people were advertising to buy gold. And of course, a lot of people got very disappointed when gold came down. But now it's turned around and it's going higher. And as we say here at Market Club, the trend is your friend. So let's clear that screen and go to our next market. By the way, we did our show last night. If you haven't seen our show, we did a 1-hour show on the markets. I think it was a pretty good show. We had a lot of great questions from our members and from around the world. It was just really very, very rewarding to do that show. So anyway, here we are. You can see the show on Market Club anytime you want. So same thing, kind of a base here in the copper market, not quite so strong, but we're still looking potentially, if we can get this market to close over, this is what we're looking for. And the level we're looking for is a close over the the 3.8 level. If we close over that level, then we think we're going to see a move up to 400. And let's see how that plays out. But generally speaking, the trend is your friend, and the trend in copper is plus 100. And all of our trade triangles are green and indicating higher levels. So let's see how that one works out. But trade with the trend, it's the way to go, and it's the way you make money in the market. So let's go back to our scoreboard and go to our next market. And we're going to be looking at 2 big stocks today. One is Hewlett-Packard, and the other one is Apple. So stay tuned for that. Again, here is silver, not quite as robust as silver, not quite making new highs for the year, but you do have that formation that we like to see, and that is the sort of energy building field here. But we need to see this market close over the 35 level. So I would say anytime if we see this week, perhaps tomorrow, a close over $35 an ounce. So let's just put a little sign there, $35. I think that would be very, very positive, indicating a move up to potentially, well, certainly up to maybe the $40 and even the $50 range. So let's see how that plays out. And let's clear the screen just for a second, because it actually, if we do that, you'll see this market actually has been higher, a lot higher earlier. And we get a couple of years there. You see here it is. Back in the 2011 area, it was trading, we got as high, let's see, 45, 48, around $48 an ounce. I think we could very easily get back up to those levels. And again, first resistance would be around 38, and then we come up to 44, and then I think $50 an ounce. So let's see how that plays out. And let's go to our next market. This is kind of an interesting one. This is Apple. And Apple, interestingly enough, they came out with a new iPhone 5 on last Friday, I believe it was. And I think something's going on here. Let me give you a personal insight into, I'm a huge Apple fan. I have all of their, the Apple iPad, the phone, computers, the whole 9 yards. I've been buying Apple for years and years and years. Love the products they come out with. I don't think that everyone is going to upgrade to iPhone 5. And here's the reason why. I have an iPhone 4S. I've downloaded the latest software, and I can do practically everything that you can do on the iPhone 5. The only difference is the iPhone 5 is slightly bigger, slightly thinner, slightly faster. That to me is not a game changer. And I think the problem is now the changes in both Android and iPhones are going to be incremental. When it first came out, it was definitely a game changer, but now I think it's incremental, and we're not going to see the same type of super enthusiasm. Everybody wants an iPhone, iPhone, iPhone. I just don't think we're going to see that. And here's a good example of it. Here we are. They've just launched this product. Lots of anticipation. Let's just take a look at the chart, because the chart always tells you what is going on. And you think, here's the game changer. The market's, everybody's anticipating, boom, boom, boom. Comes out, the maps aren't that great. Absolutely true. The maps aren't good, but there's other things you can use. But I think that's something else is going on. I don't think, I know they sold a lot of phones, but I don't think it's going to be sustainable. And look at this. This is a 50-day moving average. This line, this blue line right here. You have a weekly, if you're using our system of trading, which is basically, you use the, here's the monthly right here. That's the trend. And the weekly is for timing. Now, based on this, you would be out of the market, okay? If you're trading with our preferred method of trading stocks, which is the monthly for trend, weekly for timing. Now, you can see pretty much where we got in right here. That was a buy, and we got out right here. Nice profit. We've made great, great, great profits in Apple, no question about it. But here's the thing. Here's the line in the sand. This is a very, very key psychological area, and that comes in at 650. Now, if you look at where the market is right now, the market's lower for the day, which is quite remarkable given the fact that other markets are higher. I'm not saying that Apple's going to collapse, fall out of bed. I think that would be foolish to say that. However, what I'm saying is maybe this market has to be re-look and re-examine what's going on in the marketplace. So I think that's the key I would suggest looking at. We do have a signal to be out of the market. I think that's probably the best place to be, unless you're using our other system, which is long-term Apple, based on our monthly triangles. And that continues to be long from $355. So obviously, a $300 profit is not to be sneezed at in this particular case, but it is an excellent way to look at the markets using our tools. And it's very unemotional, very detached. So I'm showing you Apple, and now I want to show you another market which is actually really not doing so well, and that is HP. Now, HP, you can see based on our trade triangles. Now, this is, if you had no clue about Apple or HP or anything else, all you had was price action, you would have been short from 25.02. Market's currently trading at 14.70. So you can imagine what kind of return that would have given you in a very short period of time. And even if you're just using our weekly, you got you would not have missed, you would be out of the market, you would have avoided this disaster. You could have been short, quite honestly, which is something we recommend if you are comfortable shorting the market. But again, this trend, and if you scope this out even further, let's just scope it out. And you can see, here's the weekly kicked in here at 27.23. This is in this year. And you can see all the buy signals we've had, the sell signals, and it's worked out extremely well. But even if you got further, and let's just simplify this chart, just take off the Donchian trade channels and the parabolic and a simple moving average, just boom, and just look at the raw price numbers. Let's take off our weekly trade triangles. There's the monthly kicked in, and if we scope this out even further, oh, I'm going the wrong way, sorry. But you can see, here's a monthly signal right here at 46.46. And actually, that may be a little bit suspect, but certainly we had a signal to get short this market right around $45. And you can see it's really worked out extraordinarily well. Here's another signal here at $41. Even if you just cover that position right here at 28, that's a $13 move you would have made in the stock. You're back short at 25. You've already picked up another. So again, this is not trying to be smart, know all the numbers and what their plans are. It's just listening to the market. And that's the key thing we recommend at Market Club. Listen to what the market's telling you. And I think the market's telling you right now it wants to go lower with this market. HP and Apple may be turning around, which is not necessarily a great thing for the NASDAQ index, by the way. And if we close lower on this market on Friday, you know the rules. So you may want to look at that 52-week low and 52-week high rules. So I'm Adam Hewison for Market Club. Thanks for stopping by today. Every success. We've got lots of vibrant conversation going on with the debates, the markets, you name it, and it's a lot of fun. So I'll talk to you tomorrow, same time, same place. Have a great trading day.